Good morning, ladies and gentlemen, and welcome to the ZSE ETF training. Kindly confirm, maybe Enmo, if I'm audible.
Yeah, I can hear you.
Okay, thank you very much. So people are still coming in. I'll be admitting them, but I think we can start. So my name is Tapiwa Bepe, and I'm from the Zimbabwe Stock Exchange. I'll be your facilitator on this seminar, and I'd like to thank you all once again for registering and showing interest in participating in this seminar. So our presenter for today is going to be Enmo Taruvinga. He's the head of business development at the Zimbabwe Stock Exchange, and he's going to talk more about ETFs. So if you have any questions during the presentation, feel free to use the chat box, and then we'll be answering as we're going on. But at the end, we'll still have an option to answer some of the questions that you might still have. So I think for now, Enmo, you can take over and start your presentation. Thank you.
Thank you, Tapiwa, and good morning, ladies and gentlemen. So, like what Tapiwa said, perhaps if you are joining and we
It's way off. Enmo, are you still there?
apologies, I was actually on mute.
You can go ahead. You can continue.
So I was chatting to myself. Morning, ladies and gentlemen. I've already been introduced. I see there's already a hand up. I'm not sure if someone wants to ask. Perhaps they were not hearing me. But let me go. Presentation.
Sorry, Enmo, before you begin, can I ask people who have not muted their mics to please mute? I will try by all means to mute everyone, but kindly just mute your mics so that we don't have an echo as Enmo is presenting. Thank you.
Yeah, getting some echo as well. Okay, so let me share my screen. If you can confirm that the presentation is visible.
Yes, it is. You can go ahead.
All right, so welcome, ladies and gentlemen. The Zimbabwe Stock Exchange felt it was important to convene again. We once had this discussion, I think sometime in November last year, or probably December, I can't quite remember, where we talked about exchange traded funds. And we thought at that time we were preparing for a product that was going to list on the exchange. We now have since listed an exchange traded fund on ZSE, and we have seen a lot of interest, particularly from retail investors. And we felt that it's important that is our motto, is our theme, the Zimbabwe Stock Exchange. We want to try and promote informed investment decisions. We thought we should share again on what really exchange traded funds are, and probably how we can make safe investments in such securities. So we'll go through the basics of what an ETF is, what are the advantages, what are the risks, and we'll probably touch base as well on the Old Mutual ZSE Top 10 ETF, just share some bit of stats. What do those stats mean? And probably how you can take advantage of how we can actually invest in that security. Then Tapiwa will later on share with you as well how you can participate on the ETF through our online trading platform, ZSE Direct. Okay, so let me scroll down. Right, so what exactly is an exchange traded fund? So sometimes the word is used interchangeably with the securities that are traded. So when someone is buying an ETF, they're actually saying buying an ETF, which is also correct. When you are buying into shares, you're actually saying I'm buying into a company. So the word ETF, if we relate it to the shares that you are used to. So with companies are the ones that issue shares, which you then buy and sell on the exchange. With ETFs, the ETF is actually the entity that issues securities, which you then invest in. The securities that you invest in depend on what the legal structure of the ETF looks like. So you can actually have an ETF that issues shares, and you can also have an ETF that issues units. But the ETF itself is actually the fund. So an exchange traded fund is an investment entity, so it's an investment vehicle that seeks to offer investors a proportionate share in a portfolio of either shares, bonds, or commodities, or currencies. So in essence, it's a fund that pools investors' funds and then invest those funds in a diversified portfolio, and that portfolio can be made up of other securities, or it can be made up of bonds, or it can be a portfolio of commodity, or it can be a single commodity. We've got ETFs that are issued on single commodities like gold ETFs, platinum ETFs, even grains. Or it can be a portfolio of currencies, so you can have an ETF where a fund actually pools your investments and then goes out to buy a currency or a basket of currencies. So in essence, an ETF is actually the entity that is coming to list, or is the entity that is issuing out securities. The securities which are then issued by this entity are the ones that are traded on the stock exchange, and they trade like ordinary equity. So for those that have been investing for a while, you may be aware of unit trusts. So an ETF is probably a unit trust with added features. So a unit trust is similar to an ETF in the sense that both pool investors' funds and invest in a certain asset. The only added feature to unit trusts to make it an ETF is that it then allows the units themselves to be traded on an exchange. And then in addition, an ETF has got advantages over unit trusts, which we'll cover on later on in terms of costs. When you are buying into an ETF, there is no front-end costs that you incur. And when you want to redeem as well, there's no waiting period. Other unit trusts, they may say, we have got a lock-in period of, say, 3 months or 6 months before you can exit. If you want to exit earlier than that, they penalize you. Whereas with an ETF, you can come in and out at any time that you want, obviously subject to the settlement period, the T+3 that's there on the market. So like an unit trust, an ETF is usually a passive. We say usually, it's not always. It's mostly passive. When we say it's passive, we are saying it's not actively managed like other funds. So unit trusts, normally they're actively managed. So with an ETF, you normally just select an index or a commodity that you want to trade, and you simply go and buy that security or that index, and you simply hold. So that's the passive nature. Use passive investment strategies where you simply buy and hold. You don't look at the timing to say perhaps the price is up now, let me sell at a profit and wait for it to come down and probably make some profit in between. With the passive strategy, the fund simply takes your money, goes out, buys this portfolio of securities and holds them until the composition of the underlying index changes. And it's also open-ended. In other words, it's a fund that has no maximum size. It keeps on growing. That's what we mean by saying open-ended fund. As long as new investors come into that, are willing to come into that fund, it continues to accept new deposits or new investors, and it can continue growing. A closed-ended one is the one that sets a limit to say we are only building a portfolio up to 50 million. Once we reach 50 million, it's then closed. We will no longer take new investors. But with an ETF, it's an open-ended, so you can continue actually growing the size. And you'll note that when the old mutual ETF listed, it listed with 80 million units. They've since grown to about 98. So about 18 million more units have actually been added. That's the open-ended feature of an ETF. So there's a graphical presentation in my presentation there, which shows the features of an ETF. So mutual funds, we are typically looking at the unit trust scheme there. Those are typical mutual funds, which offer you diversification. And then you combine that with the advantages of a share, which is the tradability aspect. So when you combine diversification and tradability, you come up with an ETF. So it's a diversified listed fund whose securities trade like shares. Just remember that I said with an ETF, it depends with the legal structure. The securities that it actually issues and lists on an exchange can be shares or they can be units, which is probably the next feature there. So there are basically two legal structures that you find in ETFs. One is the collective investment scheme type, which is the model that the Zimbabwean capital markets have adopted. So in this jurisdiction called Zimbabwe, our ETFs legal structure will be a collective investment scheme. In other words, we are saying they are funds which are required to be registered under the Collective Investment Schemes Act. That's the principal regulation that governs how these funds are registered and how they are managed. You discover later on that in other jurisdictions they permit a corporate structure. So under a collective investment scheme structure, there are basically 4 parties to this. You will have the ETF issuer. Normally, it's a big pension fund or a big bank that sets up to issue these or to set up this fund. Then you have got a trustee and a custodian, or it can be separate. The trustee is there to look out for the interests of the unit holders, of the investors in the scheme. So a trustee is a requirement of the CIS Act that the fund sponsor or the fund promoter is to appoint an independent body to oversee that trust. And then you have got your fund manager, which does the actual buying and selling of the underlying securities being followed or being invested by that collective investment scheme or by that fund. Then you've got your index provider, depending on whether the ETF is investing in underlying securities or it's investing in commodities. If it's normally investing in securities, then there's an index provider or an index calculator, which also becomes an important part to that scheme. Then in terms of the outside of that scheme, you then have got your regulators and the participants or your securities dealers to perform the buying and selling on behalf of investors. You have got your ZSE, where it's listed and provides the regulatory oversight over issuers. And then you've got the CIS regulator, in our case, as the Securities and Exchange Commission, which regulates or registers all CIS schemes in the country. The other legal structure that you may find is an SPV. So an SPV is simply a corporate structure. So with the corporate structure, you don't have a CIS regulator. You have got a company registration. So it's basically a company, it's an insolvent remote special purpose vehicle, usually a company or a share of company that's set up, and then it invests and holds these assets on behalf of the investors. Again, it also is to appoint an issuer. It is to appoint a trustee so that the trustee is there to look out for the interests of the investors. It also is to appoint a fund manager to manage the buying and selling of whatever securities are being invested in. And if it's also following a particular index, you then find an index provider. So with an SPV, it actually lists shares on the exchange because it's a corporate, unlike a CIS structure where the issuer itself is a trust. So with the trust, the securities that you find are units. So with the ETF that's on the Zimbabwe Stock Exchange currently, it's actually a trust. And the investors that have made investments into that trust are holding units issued by that trust. How are they created? Okay, so you have got on one hand a fund company. In this case, we are saying, to give a real example, Old Mutual Investment Group, which is the promoter. So the first step is that the fund promoter sets an investment objective. So they will look out to say, okay, what sort of fund can appeal to the investment community? Should we focus on export-oriented companies? Should we focus on the small cap companies? Should we invest in gold perhaps? Or should we buy distressed companies on the ZSE? All those are particular themes. In the case of the Old Mutual, they focused on the top 10 ZSE top 10 index. So the ZSE top 10 index is a grouping of 10 companies, the top 10 companies by market capitalization, or the top 10 companies by size. So that was the investment objective which they focused on. And then with the assistance of the index calculator, which is the ZSE, you then come up with the list of the securities that make up that basket. So in our case, the ZSE top 10 is made up of the top 10 companies listed on the ZSE by market cap, your CBZ, your Econet, your Cassava, your Delta, and all those other companies that make up the top 10. So that's the list that you then come up with. The second step is then the fund sponsor can then take this list to an originator or a big pension fund. So you've got your list of the top 10 securities. You can then approach, for example, let's say NASA, to say we want to build a fund following the top 10, and we know you are the biggest investor on the market. If you give us this certain number of shares in CBZ, this certain number of shares in Econet, this certain number of shares in Delta, in exchange, we give you units in our trust. So that's when the creation or the exchange to the transformation from the underlying to units then happens. So NASA will deliver a parcel of CBZ, Econet, Delta, all your top 10 in the ways that they hold in the top 10. So it delivers that basket of securities to the fund originator, in this case, Old Mutual. I'm not saying that's what happened, I'm just giving an illustration. And then NASA in return gets an equivalent value in units. Then step 3, the participating company, which is NASA in this case, can then take that basket of units to the exchange. And the units become listed. Once they are listed, we then say, investors, we have got units in the ZSE top 10 issued by Old Mutual, which you can participate in. So when you are buying the unit, you're actually buying a derivative, because the value of the unit you are buying is representing the value of 10 shares held by the ETF issuer under custody and being overseen by a trustee. So retail investors at the end are then able to participate in the ETF through your normal stockbroker or through your ZSE Direct or through the C-Trade platform. You are then able to purchase. We'll look at how this fund can grow in time, how new units are actually created later on. This is just an illustration of the secondary market. So once it's listed, there are also two ways which wanted you to be aware that besides buying the securities from the stockbroker, there are requirements that ETFs appoint the market maker. And in the case that you cannot find units in the normal market through your stockbroker, you can actually go on to buy the units from the market maker. The opposite is also true where you want to sell your units and there's no buyer in the market, in the normal market. You can actually then approach the market maker and be able to sell your securities. So the role of a market maker, which we'll explain, there's a slide on it, but it's basically to guarantee liquidity in the ETF. So it's one feature which is new. In the equities market, we don't have market makers, but on the ETFs market, there's a requirement from the ZSE that the issuer is to appoint a market maker. And in the case of the Old Mutual listed security, they actually appointed Old Mutual Securities as their market maker. So Old Mutual Securities is there to guarantee that if you want to buy, you can be able to buy. And if you want to sell, you can be able to sell. So when you approach a stockbroker, they are then able to, you place your buy on the ZSE, and that's the normal market, the normal ETF market, and you look at the schedules. When do the normal market trading ends, and when does the market maker trading schedule also begins and ends? Because it's also a window which we have not seen being utilized, but it's actually available on the current listed ETF. So like I've been saying, the market maker is there. So in the market making trading session, we work with quotes. In the normal market, we work with orders. So you place an order through your ZSE Direct, or you place an order through your stockbroker. In short, the investor is indicating at what price they want to buy or at what price do they want to sell their units. That's the order market, which is the normal market. In the market making session, we work with quotes. And in this case, is the market maker who is indicating at what price can they buy from you and at what price can they sell to you their units. So they provide quotes which are firm quotes to say, if you don't find a buyer in the normal market for your order, you can then come to the market making window. But in the market making window, it's not you who determines the price. It's the market maker who determines at what price do they want to buy and at what price do they want to sell. Now, they are regulated in terms of how they set those quotes by the ZSE. So because they are taking a risk by being prepared to buy and sell, they are allowed a spread on the last traded price. So the market maker will be allowed to buy at a slightly lower price than the market price, and they will be allowed to sell at a slightly higher price than the market. And that's what we call a spread. So they are allowed a spread around the last traded price to compensate them for their risk which they are taking, because they are like your buyer of last resort or your seller of last resort. And to compensate them for that activity, they are allowed a spread on the last traded price of the ETF. Transaction fees, it's a question that we've also been asked. So the ETFs attracting a similar charge to the equities at the moment. We would have wanted the fees to be slightly lower on ETFs, and we are still pursuing that. We will continue to pursue that, but currently the fees that apply on equities are the ones that apply on the ETFs. So when you are transacting, please take note of that. So when you are buying, it's a total of 1.6884%, which you have to budget for your fees. And when you are selling, it's a total of 2.4384%. That goes towards fees or trading fees. Now, in terms of the ETF market schedule, so unlike equities, which trade from 9 to 12, and the continuous session is from 9:30 to 12, you find that the ETF has got a similar pre-open to the equities, 09 to 9:30. So in the pre-open, you can only put limit orders. You cannot put market orders in the pre-open. So in the pre-open, this is where you are saying, I just want to the market, when the market opens, my order should be in there. So between 9 and 9:30, you can actually put limit orders in the system. Then the market opens for matching at 9:30, and it's a 2-hour continuous session for ETF. So it closes 30 minutes earlier than the equities market. So the equities market, the continuous session is from 9:30 to 12. But for ETFs, it's from 9:30 to 11:30. And the reason why it closes at 11:30 is to facilitate that other window for the market maker. So we are saying you had your order in the normal market, which you placed and which was open from 9:30 to 11:30. And then perhaps you find out that it did not match, but perhaps you still want to execute your order. You can then instruct your stockbroker to say, can you put my order on the market maker window? So the market making trading session opens at 11:30 to 12, and that window is there to mop up any units that may be sold, or to actually provide units for buyers who would not have been able to find units during the normal market schedule. But take note that the price in the market making window is not your price. The price you get there is determined by the market maker. So you may want to consult your stockbroker to say what are the quotes which the market maker is quoting in the market making window. And then if you are happy with those quotes, you can then be able to proceed and place your order. So in the market making window, the price is set by the market maker. And take note, it's a spread. It's at a certain percentage spread from the last traded price in the normal market. How do you get returns if it's an index-based ETF? So in this case, we're illustrating using the top 5. So at the time that we prepared this presentation, the top 5 was made up of Delta, Econet, Cassava, Insco, and Old Mutual. Old Mutual has since dropped out of the top 10. Probably it's BAT in there. So that's what the top 5 index will be calculating. So the index will be a numerical indicator of how those 5 shares are moving either up or down on a daily basis, and that's reflected through the index. It summarizes the performance of those 5 counters. And then if an ETF comes, an ETF sponsor says, I want to issue a fund on this top 5, what it means is they are going to buy the Delta shares, the Econet shares, the Cassava shares, the Insco, and perhaps the BAT shares that are in the top 5. And then investors, when they invest, they get units in this fund, and those units are representing the value of those 5 counters. So as the price of Delta goes up, what it means is that the net asset value of your ETF is also going up. So that's the capital gain. If Delta prices out of the 5 counters goes up and the others remain constant, what it means is the total value of the portfolio has gone up, and it should reflect in an increased net asset value of your ETF. So that's the capital gain. The second return is that if Delta declares a dividend, the promoter or the fund sponsor would have set in their deed what they would do with that dividend. Other funds would then say, we are going to distribute that dividend to all the unit holders. Other funds may say, we actually reinvest the dividend in buying another ETF basket. Again, that will increase the net asset value of the fund. In the case of the old mutual ETF, the deed actually specifies that they don't reinvest dividends from the underlying shares, they actually distribute. So when Delta declares a dividend and it's paid out, that dividend is then shared to all the unit holders. If CASAV also does the same, that dividend is also shared to all the unit holders. So the capital gain, just like when a share price goes up, is one of the returns, and then the dividend yields or the dividend distributions also make up part of that return that you get. So in a nutshell, the index performance becomes a measure of what returns you get. So if you want to know whether you are likely to make money or not, you could simply track the top 10 index for the old mutual ETF. If the top 10 index is going up, you know that your ETF should also ordinarily, all things being equal, also be tracking up to mirror the value of the underlying securities. Just checking my time. Okay, so let me skip this one on the creation. I want to come back to it when I've illustrated something. So what are the benefits? And pardon me on the spelling there, it's incorrectly spelled. It's benefits, it should be benefits. The diversification. So like we said, ETFs mostly invest in a portfolio of securities. So they don't invest in a single security. They invest in a portfolio of securities, or they invest in a commodity. With a commodity, it could be a single commodity, but the advantage of that commodity is that it gives you diversification, because commodity is not a normal asset class. It's one of those asset classes that is not common. So if you are already invested in shares and then you get exposure to a commodity asset class, in a way you have diversified your investments in that. In addition to your normal share portfolio, you now have got a commodity asset to your portfolio. So you also achieve diversification through that multiple asset holding. It has got a benefit of liquidity. Like I said, an ETF has got a mandatory requirement for a market maker, which increases its liquidity. So you are guaranteed that at any time you can actually buy and you can sell the ETF. It's also open-ended, which means that even if the initial units that were issued, I think when the old mutual ETF was listed, we had some delay on it coming on the ZSE Direct, and some of our clients, I think, felt they were going to miss out because they felt the 80 million units are not sufficient for everyone. Take note that with an ETF, like I've already said, the units are already now 98 million. It can continue creating more units as long as there's demand for the units. They can be created. So it's fairly liquid in that you are guaranteed that if there's demand for more than the units that are issued, more units can always be created. In terms of transparency, so this is a very transparent investment asset. The top 10 index is published by the ZSE, so everyone is aware of what securities in the top 10. So we disclose which securities are in the top 10, so it's very transparent. So we can compare this with unit trusts. When you invest in unit trusts, you don't really know what the fund manager is going to invest in. It simply could be an equity unit trust, but they don't really tell you what particular shares are being invested on in that unit trust. But with an ETF, it is very transparent. If it says it's top 15, you can actually go in and look at who actually is in the top 15, so you know exactly where your money is being invested on. Secondly, the issuer is also mandated to disclose on a daily basis the net asset value of your portfolio. So it's also one area which I wanted to highlight, that if you want to track the value of the underlying security or the portfolio, the top 10 ETF currently, if you go on the old Mutual Zimbabwe website, they actually publish on a daily basis the net asset value of the ETF. So that should give you an indication of how much worth the ETF. The other advantage is lower costs. So like I said, I've invested in unit trust myself. Every time I invest in unit trust, I'm advised that there's an upfront fee of so much, about 250, another case, depending on the amount. It's a front-ended load cost. If you want to make an early redemption, you are also penalized. But with an ETF, there's no penalties and there's no front-end costs. You are aware of the costs, it's your trading costs, and they are publicly disclosed. If you buy your unit today and it settles on T+3 and they are within your CSD, you can sell them at any time you want without being penalized. So it's different with unit trust. Normally, if it's an equity, they will say hold on for either 30 days or 60 days or 90 days. And if you want to sell before those 90 days have elapsed, you get penalized. So ETFs, you are not penalized. So those are some of their advantages. But like all investments, they also carry a risk. So like all market securities, ETFs are subject to market risk. So when what we term market risk is, we are saying it's possible that the price of the ETF can go up and down. And the risk that you face is it goes down when you have bought it at a higher price. So you are subject to that risk. So like shares, bonds, ETFs behave in a similar manner. They are listed securities. You can lose money when you invest in ETFs. They are not risk-free. The prices of the ETF can go down, and that's the risk you face. And then depending also on the underlying security. So in the case of an ETF that tracks bonds, for example, in addition to the market risk, it means you are also then facing credit risk. So credit risk is the risk of default. So if it's an ETF that's tracking bonds or that's investing in bonds, in debt securities, the risk that we've then faced is that those debt securities may underperform, people may not repay, and you then lose out. So depending on the investment strategy followed, if it's a commodity, for example, gold has its own risks. It can be perhaps be stolen, or the price of gold may also go down, etc., etc. If it's oil, it also depends with storage, how much production is being made by OPEC, etc., etc. So depending on the investment strategy, you also then exposed to that particular asset-specific risk. The other risk that you face is also the tracking error risk. So, and this will be demonstrated later on when we talk about the stats on the current ETF. We've already seen tracking error creeping up on the old mutual ETF. So, like I said, the fund manager invests in certain assets or commodity, and the investment, let's say, the top 5 is worth, let's say, $5 million, which has been made. So the net asset value may be, let's say, less cost 4.9 million worth of securities. But when the portfolio is then listed, its value may deviate from the net asset value. That's the trick. So a portfolio with a net asset value of 4.9 million may trade on the market at 5.5 million, which is a value higher than the securities underneath that portfolio. That's a tracking error risk. And this can arise because either people are too excited on the market and they're driving the price up. It's also possible that a portfolio with 4.9 million can actually trade on the market at 3 million. So the market is actually valuing the portfolio less than what it is actually worth. And that can also be driven by a big holder of the units all of a sudden dumping all the units on the market and then driving the price down. So you need to be able to monitor the price and the net asset value. If those two digress too much, you are then exposed to trading error risk. Okay. This one is a technical slide. Let me skip that one. But what we have seen, perhaps let me just explain it. What we have seen is that passive investment strategies are gaining more. Over the world, and it's because that it has been proven that passive investment strategies are actually performing much better than those that actively manage their funds. So in the USA, it was found that active fund managers that were underperforming, in other words, that were not doing so good, that were not able to beat the benchmark, which they were tracking, were actually 64%. So 64% of the fund managers, after 1 year in the USA, could not outperform the index which they were following. So in other words, it was just better for them to just buy and hold securities in that index. After 3 years, it's actually a higher percentage. 79% of the fund managers could not outperform the index which they were benchmarking against. After 5 years, it's even higher at 82%. And you can see that the longer the time frame, the higher the percentage of people that actually fail, or the percentage of fund managers that actually fail to beat a buy and hold strategy. So with ETFs, because it's a buy and hold strategy, you're actually better off than investing with a fund manager who is doing active investment management, because in most cases, they are unable to outperform the index. And that's the source there. We got this from S&P Dow Jones. Then in terms of investors, what are the issues that you also need to know? So you also need to know the requirements from your ETF issuer, so that your expectations may be different. So with ETFs, the requirements for them are less onerous than with companies that have got shares listed. So you may find that they're not doing certain things that you may have been used to do, I mean to getting or receiving from the corporate listed ones. So they are required to appoint a market maker, which is for your advantage. They're only required to approve security holders' approval if they want to do a major change on the placing document. Otherwise, they can do minor changes without your involvement. So you need to be aware of that. And they are only required to publish their financials once a year. That's the other change that you need to take note of. If they update the placing document, they have to publish it on their website. So they are not required to put publications in the press. They can only put it on their website. So you also need to take note of that. So you may be reading the newspapers and not getting any updates. On the ETF, their publications are all mostly electronic. So when you want to follow the news for ETF, you have to go on their website and on the ZSE website, because that's where they are mandated to publish, unlike your normal listed companies, which are required to place advertisements in the press. What else do you need to know? Like I've already said, they are only required to publish once per year, which is the year-end results. So they don't do interims, they don't do quarterly reports. It's up to them if they want to do it, but in terms of the requirements, they are only required to publish their financials once per year. If they obtain the credit rating, they're also then required to publish it on their on the ZSE website. Price-sensitive information like all other securities, they're also required to publish that. But again, this is published on the website of the issuer and on the ZSE website. The other requirement is the publication of the net asset value, which is again not in the press, but on their website. And if they issue a dividend, they have to, that's when they are only then required to make a press announcement. So dividend notices, you then they will be made in the press. What are the exemptions? They are not obliged to publish a profit warning or trading update statements. I've already covered that. They are not required to publish half-year or interim or quarterly. I've already talked about that. And they're also not required to distribute the annual financial statements to their security holders. This is a very low risk investment type because they do publication of the NAV. So in essence, you know the performance of your fund on a daily basis. So it's not to also minimize the cost for the fund, which would eat into the returns which the investors also get. It's not very prudent to then have the fund reporting financial performance very frequently, because the performance of the fund is disclosed on a daily basis. When that NAV is being published, that's really the performance of your fund. That's how your fund is performing. So it's not really necessary to then do quarterly reports, do half-year reports. What the fund manager only charges is the management fee. So in the full financial statements, what you then be able to just notice how much management fees were charged and how much return or growth in size did the fund grow. They can issue securities with unequal voting rights. They are eligible to do that, and all those other things. Like I've already said, they're exempted from publishing in newspapers, and they don't have to notify the ZSE if they change their auditor. So we have to emphasize this to alert you as investors that there may be certain expectations that may have as investors, and then you may find that they're not doing certain things, but these are exemptions that apply to ETFs. So don't expect them to be doing some of these things. So corporate governance as well, because it's simply a buying of shares and holding, they are a bit exempt. Then just to cover the important stats on the ETF that we have listed. So it's the issuer is the Old Mutual ZSE Top 10 Trust. Like I've already indicated that in our jurisdiction, we follow the collective investment schemes trust. So the issuer is a trust, and the trustee is Stanbic. So Old Mutual is the issuer, but they've appointed Stanbic Bank, which is licensed by the Securities and Exchange Commission to offer trustee services, to be the trustee for your fund. So if you are not happy with the performance, you can also knock on your trustees' doors to say, how could you allow this to happen under your watch? In terms of the market maker, we have already covered it's all the mutual securities. So where you want to buy outside of the normal market, or where you want to sell outside of the normal market, you can let your stockbroker to get into the market making window, and they would be able to transact. The authorized participant, which is also another important aspect, is Old Mutual Investment Group. So the authorized participant is the entity that can create and redeem units directly with the issue. Like we said, it's an open-ended fund, but not everyone is then allowed to go to Old Mutual to the trust to say, I have got money, there's no shares in the market, or there's no units in the market, can you create new units for me? The creation is done through the authorized participant. So everyone else will have to submit their bids. Then this is outside the market. So your big pension funds, your big institutional investors, when they need significant amount of units, they can go to the authorized participant, and then the authorized participant can create additional units for them. In terms of the total units now, we are at 98 million, like we've already said. On the 4th of January, 80 million units were issued, and then with new units are being added sometime, I think on the 29th or 27th of, it should be 29th of January. We had additional units being added about 18 million. So we have got 98 million, and I was actually advised that these units are likely to go up again. There's demand out there, and more people are demanding the units. So the issuer is likely to create more units along the way. The market cap now, having listed with a market cap of about 80 million, it's now 178 million. But don't confuse the market cap with the NAV. The market cap is simply the units listed and the market price. What you need to compare is the price on the market and the NAV. So like I've said, we already note some divergence, and that's the tracking error risk, to say the net asset value is about $57 or $58, but the price is raised to about $80. So there's about 23 cents gap there, 23, 24 cents gap there, which is the tracking error. In other words, the market is valuing the ETF more than the value of the assets being held under trust. And that is a result of excitement on the market. People were clamoring to buy the units that are there. But when you are investing, like we said, you want to promote informed investment decisions. It's prudent for you to check the NAV compared to the price, and then be able to make a prudent investment decision. Okay, if this scenario persists, where the price exceeds the net asset value, the authorized participant, which is the old mutual investment trust, can actually take advantage of this and actually create more units, so as to make sure that the price probably somewhat goes down, and they can also make money. So in this, what the authorized participant will do is they will simply create a basket, or they will simply buy the Delta, the Cassava, the Econet, and they will deliver those underlying securities to the ETF issuer. And in return, they will get the ETF units. So what they are expending per unit is probably 1.578 before cost. So that's their cost of buying the underlying securities. You just have to add the 1.68% the buying costs. And then they go with that basket to the ETF issuer, and the issuer then issues units. And mind you, they're getting units which are worth $1.8 in the market. So, but their cost to build up the portfolio required to get a unit is just $1, perhaps 60 if you add the transaction costs. So they incur a cost of about $1.60 to create a basket of units, of shares, which if they exchange for units, they get units that are worth $1.80 in the market. So there's an arbitrage opportunity there if this persists, and then that can result in the creation those slides which I had skipped earlier on. Perhaps I can explain them now. So creation, like I've already said, is the authorized participant. You submit an application to your ETF, and you then deliver the reference asset. In this case, is the underlying securities, and then the issuer gives you units, which we can then sell in the exchange. This presentation will be shared, and you can go through the mathematics of how much money can be made depending on the difference of the price and the NAV in the market. Ladies and gentlemen, I've reached my the time slot that I was allocated. So I will end my presentation here and take any questions if there are any. Back to you, Tapio.
Okay, thank you, Enimo, for that insightful presentation. I've noted that there are no questions in the text chat. So right now we'll just give maybe 5 to 10 minutes. If someone has a question, kindly raise your hand so that you can then unmute and ask your question, if there is anyone with a question. Elvis and
Hi,
earlier
can I
raised
ask
his
a
hand.
question?
Yes, go ahead.
I just wanted to ask, maybe I missed it. Where do you get information on the NAV?
Beverly.
The
Actually,
NAV, the net asset value. Where do I obtain that information?
right. So if you look on our website now, it's actually on the landing page. We are publishing the stats for the old mutual ETF. So it's available on our website. It's also available on the old mutual Zimbabwe website. It's being published on a daily basis there. So those two sites, you can find it on the ZSE website or on the old mutual Zimbabwe website.
Okay, thanks for that, Inmo. I noted W. Masri also has a question. You can kindly unmute and ask your question.
Thanks, Tapiwa. Thanks, Enmo, for the presentation. At one point, you mentioned that the old mutual ETF is based on the top 10 listed companies on the Zimbabwe Stock Exchange. But on another point, you then said old mutual is no longer in the top 10. So does it mean that this index, this fund is always tracking the top 10, or it's fixed to the listed entities that were on the original listing? Thank you.
Okay, yeah, so there's the old mutual, the parent company, which up to August last year, when it was then put under trading hold. So it dropped from the top 10 before the old mutual ZSE top 10 index was listed. So the top 10 index is rebalanced on a quarterly basis. In other words, it changes every quarter depending on who would have grown in market cap. My apologies, let me move away from this baby as I was working from home. So the top 10 currently does not include old mutual, the company. So we have to take note that there's old mutual Zimbabwe, then there's old mutual, the parent company which was listed on the ZSE. Old mutual Zimbabwe is not listed on the ZSE, but it's a subsidiary of the old mutual that was listed, which is currently under trading hold. So yes, the index continues to take the top 10, but the top 10 currently does not have old mutual, the parent, which was which is based in South Africa, because it dropped from the index last year in August. The ETF was only listed this year in January.
Okay, thanks, Enmo. Gwenna, you can go ahead and ask your question.
All right, thank you so much. I just wanted to check if we are able to trade ETFs on the C-Trade platform. Thank you.
That will be difficult for me to answer, but C-Trade is offered by Escrow, which is an independent company from the ZSE. To be honest, I haven't checked whether it's now available on the C-Trade, but you could probably use their contact details and find out if that product is available on that platform. To be honest, I haven't checked. We only managed to bring this on ZSE Direct this week. So I'm not sure if they've managed to, because what okay, it is when the product was launched, it trades on a different board. So on the market, for those that are technical, use different boards. We have got the ETF, we have got equity, we have got the bonds. Those are different boards, all in the same system, but they're different boards. So there are some technical configurations that you are then required to do for you to access a separate board. So I'm not sure if on the escrow side they've managed to link their end platform to the particular ETF board as of yet.
Okay, thank you for that. In more, Mishek, you can unmute your mic and ask your question. You can go ahead, Mishek. Okay, he might not be available right now, so I'll move on to Mobi. You can go ahead.
Hello?
Yes,
Hello?
Mishek, go ahead. Yes,
Okay.
go ahead.
I was saying, are the number of units disclosed on each day?
Okay, so not necessarily on a daily basis, but whenever there's an increase, a publication is done on ZSE website. So we don't publish the number of units on a daily basis. What is published on a daily basis is the net asset value. But whenever the units change, it's on that particular day only is a publication then made on the ZSE website. It's just similar to equities. We don't really publish the number of shares on a daily basis. We only publish the changes when let's say Delta is done a share option scheme and someone has exercised their rights. We only publish when someone is exercising the shares if increased, but otherwise we don't publish the number of shares for Delta on a daily basis. So it's the same methodology. We only published when the units went up, and if there's another increase, that will also be made, but not on a daily basis.
Okay. Is it disclosed when an increase is imminent?
Not really, no. No, it's not. It's only disclosed post after it has already been posted on the ZSE. I mean, on the ATS.
Okay. Thank you.
Thank you. Mobi, you can go ahead and ask your question.
Thank you very much. I probably might have missed this. My internet was a bit choppy. So I wanted to find out, is there a minimum amount of, I don't know if I can say, shares of value, number of ETF shares that you can get as a retailer, for example?
Okay, so I can take this one. So it depends with the channel which you use. If you go to a stockbroker, the stockbrokers have got different minimum thresholds. So it depends with the stockbroker, particular stockbroker. If you come through C-Trade, the minimum units will be 100 because that the C-Trade is connected to the regular board. Same way, if you come through ZSE, the minimum would be 100 units, but on ZSE, there's an additional minimum in terms of value. The minimum value on ZSE Direct is $500. But what can be traded through the online platforms is a minimum of 100. So the online platforms are configured to the regular board, which only trades lots of 100 and the multiples of 100. So you cannot buy 550, you cannot buy 150. If you're using the online channels, it has to be multiples of 100. But on ZSE Direct, the minimum value that you have to purchase is actually $500 worth of units. If you go to a stockbroker, they will then be able to tell you what their minimum for them to act on your behalf would be. But I would say perhaps roughly $500 would be. I'm not sure if C-Trade has got a minimum at the moment, but on ZSE Direct, the minimum is $500 worth.
Thank you very much. That's pretty clear.
Thanks for that, Inmo. I think our last question is from Watson. You can go ahead and ask your question.
My question is on this change in the the number of units. They continue to issue the number of units under this ETF. Now, obviously, this comes in as cash. Is there a period in which this the fund manager is expected to have bought whatever the equities which are underlying this exchange traded fund? Because my fear is you may have a situation where the fund manager just holds cash and ultimately the net asset value will be deteriorating, affecting the people who are members of the ETF already. So is there a leg in which you expect that the fund manager should have bought one of these 10 whatever counters which make up the ETF?
That's a very good question, very good observation. So in terms of the increase, they are only permitted in terms of the ZSE rules to increase the units when the actual underlying assets have actually been bought. So the way it works, all the mutual or the authorized participant, in fact, the issuer will make an application to increase the units, and then the trustee, it goes to the trustee, which is the independent company. The trustee will then verify that the increase in units, because when the units are increased, they are going to a particular person who is submitting the corresponding underlying. They will then verify that this person who is applying for these units actually holds the securities that are equivalent to the units that they want. So the trustee verifies. Once the trustee verifies, they then send that application form to the transfer secretary, who also checks, because the transfer secretary is the ones who hold the register. They also then check that these are the person who is claiming to hold the underlying securities is actually the beneficial holder of those securities. Once the trustee and the transfer secretary have confirmed that the person applying for the units holds the securities, they then make an application to the ZSE and to CDC, which is the CSD. Upon receipt from ZSE, we then authorize the movement. So it's done simultaneously. The underlying securities are moving to the trust, and then the units are moving to the person who has applied. So that is done simultaneously. So there's no time lag where one is holding cash and the other is holding the units. It's done simultaneously. So at the time that the person receives their units, the underlying securities are also then changing hands to the trust.
Okay, thanks for that, Inmo. I think all questions we attended to. If someone still has another question, you can kindly just make use of the chat, and then we will, you can then answer to that question after I've done the short presentation on how you can then actually buy the ETF on ZSE Direct. So mine is just a short presentation, more of like an illustration on how you can then make use of the ZSE Direct platform to enable you to actually trade. Confirm if you can see my screen.
Yes.
Okay, perfect. That's fine. So for someone who's starting out, you need to be having an existing account on ZSE Direct. And if you don't, you then have to do the process of registering for an account. So because I already have an account, what you just simply do is you log on to your account, go on the URL www.zsedirect.co.zw. You enter your credentials, your email, and your password. And then once you log in, this is the page that will pop out. So you also note that on the main dashboard, you can see that there are two tabs, which is either the equity or the ETF. Under my portfolio holdings, it will then show you the Old Mutual ZSE Top 10 ETF, because I currently don't have it yet, it's yet to be matched. Under equities, it will just show you the equities that you have. So before you actually even buy, you need to ensure that you have funded your wallet. And in my case, I had already funded my wallet. I already have enough money to then go ahead and do the buy order. So what you then do, you can see that you can use either this buy tab or this buy order tab to actually then go through. I'll just simply click on it. So you also note that because we have equity and ETFs on ZSE Direct, when you then want to buy the ETF, you have to select the ETF tab. As earlier noted by Enmo, the trading period for the ETF is from 9:30 to 11:30. So it means I'm still within the schedule. I'll be able to then buy the ETF. So you select the counter, which is the old mutual. Upon selecting the counter, you'll see that there is a market depth feature that then pops out. This is also available even when you're buying equities. So basically, the market depth shows up to the 10 best orders on both the buy and the sell side. You might then ask, how best do I use this market depth feature? For a best buy order, that is the order which reflects the highest bid price at that particular point in time. And a best sell order is an order which actually reflects the lowest offer price at that particular point in time. So earlier on, Enmo also highlighted that our quantity can only be in multiples of 100. So if you put 50 or 80, it will not go through. You actually get an error message. So in this instance, let's say I want to buy 300. You also note that under the bid price, there is the range, which is the price range that actually then guides you on the price that you can then put in between, so for you to actually get an execution of your order. So when you want to get an immediate execution, for example, I'm doing the buy, what you then need to do is actually need to match your price and quantity to the best offer, or at least one of the offers. So the offer side is the one which is in pink. If I want to get an immediate execution, it means we can see that the range of the ask price is from $1.89 to the highest being $2. So let's take, for example, I just put $1.80. You also get the total cost before the charges. And on ZSE Direct, the minimum value is 500. So it means I am within the range. And then I select my time in force. Time in force just provides you with an opportunity on how long your order will remain in the system. So we've got the day order and the GTC. Basically, the day order will remain valid until the end of that particular trading day. So in my case, when the market closes and my order is not matched, it means I have to re-enter the order tomorrow. But with the GTC, it remains valid for 30 calendar day from the date it is initially captured. So I'll choose a day order and then I place my order. So before you can actually confirm, it will then show you that, for example, the symbol you're trading for ETFs, and if everything is in order, you then need to click on the confirm. If your money is not enough, under the confirm button, you actually see a tab that will allow you to fund your wallet before you can proceed. This message basically just highlights that my order has been placed and it has been fully matched. So for you to then track, you'll see that because it has matched, it's not under working orders. But in the instant that if it was not yet matched, you'll see it under working orders. But here it's going under matched orders, and you can then view the details. Because settlement takes T+3, it means this particular order will only reflect on next week, Wednesday, because it's T+3. In a nutshell, that is how you can then use the ZSE Direct platform to then buy the ETF. Thank you very much. I don't know if we still have any questions. I think we've run over our time by 15 minutes. If there's someone who still has a burning question, so that we can then just answer those few questions. I can see Claudine, I hope I pronounced your name correctly, and Watson. So Claudine, you can unmute and then we'll take the question.
Okay, thank you, Tapio. I just wanted to confirm something. Where can I get assistance in terms of getting my CSD number. I registered on ZSE Direct, but I think it's now 4 days and I haven't received my CSD number, so that at least I can start trading. Thank you.
Let me assist you with that. When it comes to ZSE Direct, ZSE Direct is actually coming in as a path to the stockbroker. So you'll see that when you register and you select your stockbroker, the authentication of your KYC details is actually done by your broker, as well as allocating you the CSD number. And this is also done outside the ZSE Direct. So for any assistance, we've got an email that you can actually send to us. I'll put it in the chat box. ZSE Direct at zse.co.zw. We are here to assist you in also following up with your broker. He'll be able to then take note whether you've uploaded all the necessary KYC documents, and he'll be able to then approve your account and also then allocate you that CSD number. So just send us an email and we'll be able to assist you further on that.
If I can also perhaps come in later, Pure.
Yes.
Perhaps I think an apology to that client. We have noted the delays. I think we've been getting these inquiries as well. Just to advise, I think our clients that due to the lockdown as well, what you find that our brokers are not all of them working from their offices. So most of them and most of the staff that actually help us on the platform are working from their homes, and that has had an impact in further delaying processing of accounts. So when someone is working from home, it's either the internet is not up or probably there's power issues, and generally it's different compared to when someone is in the office. So kindly bear with us. We're hoping perhaps this lockdown will be lifted, but we've noted that the delays have actually been worsened, and the explanation we are getting from our stockbrokers is that a lot of their staff, is probably the brokers themselves, are also working from their home, and normally the turnaround becomes a bit longer.
Thanks for that, Enmo. We also have Watson. You wanted to also ask a question. Go ahead.
Thanks, Tapio. Just a quick one. I'm new to this ZSE Direct thing. Is it possible, to fund my wallet from outside the country via credit or debit card using Visa? And the minimum, which is $500, is that 500 US dollars, or is it the same currency?
Okay, thanks for that, Watson. So in terms of funding your account, we've got two options that are currently there. And this is when you fund it locally. So it means that for now, because we are, the ZSE Direct is ZW denominated, so you won't be able to then use your Visa account. So alternatively, you can either use your EcoCash, or you can then do either a Zipit or RTGS through one of the banks that we are connected to. And in terms of the second question that you asked on the minimum quantity, this is 500 Zimbabwean dollars.
Okay, thank you.
All right. I see, Ronald, you also raised your hand. You can go ahead.
That you're using C-Trade to trade and you want to shift to ZSE Direct, what's the procedure? Is it possible for the ZSE people ZSE Direct people to take that CDS number and use it to ZSE, then you remove the C-Trade account? Thank you.
Let me answer that one. So
okay.
It's not possible to migrate your CSD account to migrate your C-Trade account to ZSE Direct. The process flows are slightly different. C-Trade works on a nominee platform, which means that at the CSD level, it's not at beneficiary level, so you don't actually have a CSD account at the CSD, the depository level. It's only it's a one nominee which is being used. Whereas on the ZSE platform, we are working on a beneficial ownership platform, which means the client actually is sitting on the CSD directly. So you can just open a ZSE direct account, but you won't be able to move or to see the assets or securities that you've bought from C-Trade, because at CSD, they won't be in your name. They are under the name of the nominee being used there. You can only trade them within C-Trade. You can only be able to see the new ones that you would have bought through ZSE Direct. So it's not possible to migrate your portfolio from C-Trade to ZSE Direct because the processes are different.
Thank you. So is it a problem if one uses both trading platforms, C-Trade and ZSE Direct?
No, there's no problem at all. Both are meant to provide convenience to the investing public. So it's really up to the investor to choose whether they want to go with both, to use one now, to use the other one later. It's really up to the client. There's no problem with that.
Thank you very much.
Okay.
Thank you, Ronald. I can see that Beverly, you have raised your hand. I think that's the last question that we have. Beverly, kindly go ahead.
Yes, thank you. I just wanted to ask any more if he's able to share his details in case we've got other questions.
I think Tapua can send our emails. Probably we can those that may also want the presentation. Which email do we use? Do we use info or what? Taps.
Yes, we can. I will send using my own email, and then we are also accessible using info. So any of those platforms, they can reach us.
Yeah. So I think
Tapua, thank you.
Can just drop Tapua an email and she should be able to respond to you.
Okay, so thank you very much once again, ladies and gentlemen, for taking time to actually come through and learn more about the ETF. Our apologies that the meeting ran over 20 minutes, but I hope it was beneficial. I also like to take the opportunity to thank Enimo for impacting that knowledge to us. And then if we have any further questions, we are here to engage with you. And I will also share the presentation as well as the recording in case you just want to go back and also listen to this recording. Once again, thank you very much. And let's remember to keep being safe and have a good weekend.
Thanks, Tapua.
Thank you.
Thank you, Tapua. Cheers. Bye-bye.
Thank you.
Thank you, bye.
Thank you.
Thanks, Tapua.